Much like passive losses, net operating losses have some special treatments that we're going to look at right now. Okay, so a net operating loss is where you have business losses that exceed all of your other income. So maybe you had a W-2 and you made $20,000 on the W-2, but then you were self-employed and you lost $50,000 on that. You don't have enough other income to use up your losses from your business. And so you would lose that deduction, and that wouldn't be quite fair, which is obviously a contrary statement to where I say whatever way gives the IRS the most money is the right way. In this case, they're going to give you some leeway with it. And what they do is they allow you to carry that NOL into future years, and you can deduct it as long as it doesn't exceed 80% of your future year income. And you can carry that forward indefinitely. And so now this is a change from the way it was before the 2018 TCJA rules. Before then, you were allowed to carry your NOL backwards for 2 years by amending your tax return. And so you could deduct your NOL that you generated in 2017, you could carry it back to 2016. And if you still had some more left over after eating up all your 2016 revenue, you could move it backwards to 2015. And anything you didn't use up in 2015, then you could carry it forward for 20 years. And so that was before 2018. After 2018, the IRS said no more carrying it backwards. You can only carry it forward, but we're going to let you do it forever. You can carry it forward for as long as it takes you to use it up, as long as you're only using 80% of your income in the future years. So that was a good, I think, better option. Taking them backwards and amending tax returns was a little bit cumbersome, but it was better. You have the present value of money. Money today is worth a lot more than money in the future. And so it was a lot better to go back and amend your previous tax return so you could get immediate relief. You would often amend those tax returns and get some of your refund. You would get a bigger refund. Money you paid in, you would now get back out. And so that provided you immediate relief. Now you're not going to get immediate relief. You're going to have to carry that loss forward until you use it up. So if you lost $50,000 this year, I think this is going to be a big issue this year with COVID because so many restaurants, bars, other shops had to close down, but they still had to pay their rent, their mortgage, their property taxes, utilities, whatever bills they have to pay those. So they're going to have some huge losses this year, and it might offset their other income, especially if maybe this business was their only source of income, and now there is no other income to offset it. So they're going to have this NOL. If it was pre-2018, we could have carried it backwards and amended 2 years worth of tax returns and got them some money right now, some immediate relief by adjusting their refunds from the previous years. But now we can't do that. We've got to carry it forward. So right now, people who are generating these huge losses this year, we're going to file their taxes in early 2021 when they might still need the money because they're still closed down or whatever. But they're not going to get anything because they might not have any other income to offset. So we're just going to have to carry it forward to 2022. And maybe then we can get some back. And, then we'll have to carry it forward indefinitely until we've recouped all the passive losses. So that's net operating losses. Coming up, we're going to talk about kind of a confusing one, the qualified business income deduction.